The side effects of bad credit. Poor borrowing habits erode your credit, which makes it a lot tougher to get loans in the future. Key takeaways: poor credit can make it harder to get car and home loans, and to qualify for credit card accounts, you may need to start off with a secured credit card to build your credit. Consumers with lower credit scores generally pay more for auto, renters, and homeowners insurance. Employers may run a credit check before offering you a job, especially if you're applying for a management position or one that involves handling money. Bad credit means trouble getting a loan. It probably doesn't come as a surprise that before handing you a new loan, banks want to know how likely you are to pay them back. One of the primary ways they make that assessment is by ordering your credit score through providers such as FICO and VantageScore. A low score can make it harder to borrow, whether it's a car loan, mortgage, or credit card account. And if you do qualify, you'll likely have to pay higher interest rates to make up for your great level of default risk. Borrowers can sometimes get an FHA mortgage with scores as low as 500, although you would put down at least 10% and have to pay mortgage insurance, which will increase your overall borrowing costs. If your credit is less than stellar and you face a financial emergency, you may need to borrow money in a hurry to help you weather the situation. 670 the minimum FICO score needed to get many credit card accounts. Therefore, they'll typically obtain your credit report as part of the application process. There are some ways around bad credit. You can get a cosigner or offer to pay a higher security deposit, for instance, but it's much easier to go in with a respectable score. They often run a credit check before making an admission to make sure that an applicant can pay the bill. You should always know your credit score before trying to borrow money. Here's something a lot of consumers don't anticipate when they rack up a big credit card bill or fall behind on their mortgage, paying higher auto insurance premiums. If you're wondering why that's the case, it's because of research showing a correlation between poor credit scores and the likelihood that drivers will file a claim through their auto insurance carrier. Other types of insurers may also be taking a look at your credit reports. For example, some renters and homeowners policies use a proprietary credit scoring system to determine your rates. While life insurance companies don't typically use credit scores in the underwriting process, it may be harder to get a policy or obtain their best rates if you've had a recent bankruptcy. Bad credit is often a hurdle when trying to set up an account with a utility or an internet company. Customers with lower credit scores may have to pay a deposit before signing up, which acts as insurance should you fail to pay your bill. Some require users with lower credit scores to use a prepaid plan or put down a deposit. The next time you interview for a job, your potential employer may not only ask for a list of references but also permission to run a credit check. Letting your credit score languish may not only cost you money in the form of expensive loans. A poor credit history can have wider-ranging consequences than you might think. Not only will a spotty credit report lead to higher interest rates and fewer loan options, it can also make it harder to find housing and acquire certain services. If it's been a while since you took a peek at your credit report, it might be a good time to see where you stand.